Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Monday, October 22nd, 2012. Well, a continuation of the trend to the downside today and a candle that's made another lower high and lower low. Previous day's trading we had a change of trend to the downside with a very large black body candle. A very strongly bearish candle that took out the important previous support and resistance area at 1440 in a very bearish way. But now we see the market interacting with the cloud and quite a change in momentum today. The previous day's trading, the sellers made a very strong amount of net bearish progress. Today they've made no net bearish progress. All of that progress that they've made has disappeared. And we have a very small wide-bodied candle with the momentum switching to a degree to the buyers throughout the trading day. We have this very large shadow on the bottom of this candle highlighting the loss of commitment by the buyers throughout the trading day as the market tested to the 1422 area of previous resistance and support, and now that area is acting as support and will be a very important area moving forward. We also saw the market test just to the barrier of this flag pattern, and here we have an uptrend in place in this congestion area like a flag on top of the flagpole, and we've seen support come in there. For today's trading, the buyers have taken control of this market, whereas the sellers were previously strongly in control, and they've closed up towards the high. Having said that, however, the market is now trading within the cloud, the Kumo, and the market has had trouble trading outside of the cloud today. We see this small shadow, and the top of the cloud is now actually holding as resistance for this market, so we do need to watch that area tomorrow for potential resistance once again. In terms of the Fibonacci extension, and here we're examining the first time frame downtrend and its relationship to the previous time the market was trending down. For the previous day's trading, the market tested to the 161.8% level, bearish close outside of there. Today the market's tested to lower levels, testing almost to the 261.8%, but not quite. There's a possibility that if the market does continue trending down, we could trade to the 261.8% at 14.15, but certainly the sellers have lost all commitment to taking this market lower. There is a very strong possibility of a change of trend to the upside, and this pattern is a hammer type pattern and a Japanese bullish reversal type pattern on a very small scale. However, the market hasn't been trending for a long period of time, but the extent of the trend to the downside is quite large in terms of the recent past, and it does suggest that there is strong potential for a change of trend around this level. In terms of the Fibonacci retracement, here we've now today seen a strong rejection from just below the 100% level. We're examining the relationship of the current first time frame downtrend to the previous first time frame uptrend, and the previous day's trading the market tested below the 78.6% in a bearish manner. Today we've tested below the 100% with very strong rejection. It does suggest that there is a strong potential for a change of trend to the upside. In terms of the trend lines and trend channels that we've drawn in the recent past, here for the previous day's trading we saw the market test outside of the trend line, this dark blue line here, in a very bearish manner, and today we're now seeing buying coming in. It does negate that trend line, but now also it does suggest that the momentum that the market had in this strong uptrend is weakening, and that's basically the beauty of using the trend lines. It actually tells us something about momentum and does suggest that momentum is weakening. In terms of Ichimoku, we have a market that's no longer bullish in any time frame. The market was trading outside of the cloud for quite some time. We had a bullish market in the long-term time frame for quite some time, since June last year in big picture terms, but now for today's trading we're now trading within the cloud, and that's significant. Quite a change in sentiment in this market. Let's see if the cloud can hold as strong support for this market, and there is potential for the market to break out back up above the top of the cloud, but it has held as a minor resistance level for today's trading. But the market is set up for that potential breakout. We do need to watch the 1440 level of previous support. It will offer itself now as resistance, so that will be important moving forward. And in terms of the medium term and fast term timeframes with Ichimoku, the market is also bearish in those timeframes by trading below both of those indicators. We saw previous tests below both of those indicators, and certainly below the Kijun-sen, and that's significant. Another bearish close below the Kijun-sen, and it does suggest that this market has changed in terms of the dynamics in that medium-term time frame. Again, today, a deeper probe down below that Kijun-sen. It is important for this market to find support within the cloud. As we move forward in time, the amount of support that the cloud will be providing will be lesser and lesser as we move forward, because it becomes less thick, and the one of the indicators that make up the cloud will actually is moving higher, and the market will have an opportunity to break through to the downside over the next month or two. So we do need to watch that. In terms of the flag pattern, finding support down at the bottom barrier is important. Flags tend to be continuation patterns, and there is a very strong likelihood that the market will break out to the upside. But we do need to watch for a close down below the bottom barrier. They can also be reversal patterns, and if we see that, then there is potential for the market to trade lower, basically the width of the pattern projected down from the breakout, which would be just below the 1400 level. If the market does test lower, we have the 1400 level, the round number here, coinciding with the bottom of the cloud. So over the next few days, and certainly the next week or two after that, the area around there will be very, very strong support for this market, but we may not see the market tested there. We do have very strong support all the way down through to there. So for tomorrow's trading, a very important trading day. We've had the sellers lose control of the market. They've lost commitment throughout the trading day today. The buyers have taken control for the trading day. We do want to see the how the market reacts to the top of the cloud here. If we see strong bullishness and a breakout up above the cloud and a strong close up above there, and certainly up above 1440, we could quite easily see the market testing to the Kijun-sen and the Tenkan-sen, which are trading around the 1440 levels up to 1450, and there is a possibility that we could see the market testing back up to the top of the flag pattern, which at the moment is up around the 1470 level.